Hi, we're ready to go ahead and get started. Welcome. I am Mary Ellen McGonagle, and I'm the founder of MEM Investment Research, and I'm really happy that you could join me today. I look forward to reviewing with you how to spot trending stocks, and then we'll also get into once you've spotted them, how to go ahead and then trade those trending stocks. And I really look forward to reviewing this information with you to help you become more knowledgeable. This particular skill is very critical, and I think you'll find a lot of the information that we're going to review quite helpful. So let's go ahead and I'll begin with a brief overview of who I am, and if some of you have heard this before, I apologize, but we'll dig in. Again, Mary Ellen McGonagle, and I, growing up, really was not terribly aware of the stock markets and of Wall Street. I always did have a love of finance, and in a stroke of luck, after graduating from college, I moved to New York City, and I was introduced to an individual that was able to help me secure an interview and then a job with Goldman Sachs. And I was in Manhattan on their trading floor, and it was really, as you can imagine, quite exciting. And I knew I had found my home, my career, and it was a period in the 80s. There were millions of dollars being traded, uh, and it was just really a wonderful experience. And from there I moved on to what's called the buy side, and I secured a position with a large institutional insurance company in New York City, and started out there as an assistant portfolio manager. And again, this was fixed income, and I moved up the ranks there to the point where I was heading their trading desk. I was managing over $2 billion in assets. Again, this was fixed income. And it was during this period that I really got a feel for how, if you were managing quite a bit of money, again, this was in the mid to late 80s, that in that position you were able to get information prior to individual investors, and it wasn't anything illegal. It was just the way things were done at that time. The internet was not prevalent. There wasn't an ability to trickle that information down. But as you know, the SEC has stepped in, and now we are and have been for the last 10 plus years in a period where the individual investor does have access to the same information as those big portfolio managers, and I think that is really, really exciting. It's a time where individual investors can outperform the markets if you are educated, if you continue to attend webinars similar to this and really learn how to trade and what moves the stock. Again, great opportunity for the self-directed individual to get in front of these stocks as they are starting to trend and start to move. So moving along, I did leave that portfolio management position with my then new husband, moved out to Los Angeles, and I again was afforded a wonderful opportunity to join William O'Neill and Company in Los Angeles. And for many of you, you may know that they are also the publisher of Investors Business Daily, and I was on what was called the institutional marketing side. So my role during my 15 years there was to travel the globe. I met with many top portfolio managers. I was teaching them the O'Neill methodology, but also was advising them on the markets and on individual stocks. Oftentimes they would provide me with their portfolio, and if a stock looked poised to trend either up or down, I would advise them. I was there through many, many different market cycles. Of course, bubble of '99, the subsequent crash, the '08 banking collapse of the markets, and so on. And throughout that entire period, a big part of my role and my job was to constantly review charts, looking for commonalities, and that's a lot of what O'Neill's work, of course, is centered around, and studying these big winning stocks. What were the common characteristics prior to their big moves, and also staying on top of the markets. That was a big part of what we did, and I enjoyed it immensely. More recently, I've started my own investment research firm, and I do still work with some of the same institutions I worked with before, but more recently I've opened it out to self-directed and individual investors, and for me that is really quite exciting because I can share my many years of experience, and it brings a new depth to my work, and it's something that has re-energized me, so to speak. So again, I look forward to sharing this information with you. Part of my work at MEM Investment Research is putting out a weekly as well as a midweek report, newsletter that provides insights into the broader markets. It also has suggested buy ideas, and I also am a writer for stockcharts.com. They have a top advisors corner. There are 4 of us that submit to that, and I'm also a writer for thestreet.com. For any of you that would like to view any of my other work, it is available. So enough with that. Let's go ahead and move on. I do need to just at the very least show you this disclaimer before we begin, and I'm not going to read the entire thing, but basically wanted you to know that today's information is for educational purposes only. So I'm not going to be recommending any buy or sell recommendations will not be involved. And also, if you could please save your questions for the end. I expect to have ample time to answer any questions, and I do look forward to doing that. So let's go ahead and I'll review what we will be covering today. The first item that we will review is I'm going to provide you with a definition of exactly what is a trending stock. The second item is we'll review how you can go ahead and catch that trend early. There are certain tools that can help you spot a trend early, and we'll go ahead and review those tools. Thirdly is how can you pinpoint when a trend is over, and this is really, really important. In some cases, for many investors, this can be the most important tool because you don't want to leave profits on the table, but more importantly, you don't want to lose any capital that you might be putting to work. So we'll go ahead and pinpoint when, in this case, this is the uptrend is reversed. And the next item, using history as a guide. So we'll go ahead and be using quite a number of examples, and these are going to be historical but recent charts that will go ahead and review each of these particular items. And then lastly, if you stay to the very end, there will be a special offer at the end of the presentation. I hope you stick around and take advantage of that offer. It's not something that's put out on a regular basis, so I again hope you stay for that. So let's go ahead and get started at the very beginning. I mentioned to you that we would be reviewing what exactly a trending stock is, and basically when you are looking at or thinking about using technical analysis is actually built around the premise that all stocks trend, and much of the analysis that technicians do, they center around defining that trend and then trading accordingly, buying and selling based on that trend. So the trend, of course, can be upwards, it can be sideways or downward, but being able to identify the trend and act on it, it's going to be really one of the most important aspects of your trading. I think I mentioned that in the beginning, but again, I can't stress it enough how important knowing how to spot the trend and then being able to trade it is going to be. So to define a trending stock, that is to say that the stock's exhibiting signs of continuing to head in a certain direction. So rather than you getting whipped around in the markets, you want to make sure that the stock you are looking at and getting involved in has entered a very solid trend, and you want to make sure that it has great odds of maintaining that trend, and we'll review all of this. And much of the work that I have done and I still do now is centered around picking up medium to long-term trends because institutions generally, they don't have the freedom to trade in and out of stocks frequently. I want to make sure that the trend does have greater odds of being extended for a longer period. But I do still work with hedge funds, and they will also pick up on some shorter term trends. So what I'm going to be reviewing with you today can be used for really any time period, and you'll see that. So let's go ahead. I mentioned that there are certain tools that can really help you pick up whether a stock is trending, and then equally important, whether that trend is sustainable or still headed in that particular direction. So I'm going to review with you some of the different tools that I have found useful over the years, and if you can remember that the information that I'm sharing with you has been culled from many years of studying the markets and helping professional money managers. So over this time, I have found, actually we'll be reviewing 3 critical indicators, and these indicators are being used today not only because of their effectiveness, but also because they are readily available on pretty much every trading platform. I want to make sure it's information that you can use after this webinar. And the other thing that I did want to mention to you is we'll be reviewing 3 of these. Generally speaking, you will want more than one of these indicators signaling a trend at the same time. And again, we will review this, but that compilation of more than one is going to provide you with confirmation, and then ideally with confidence, so that you can go ahead and place your trades and be profitable. So today we're going to be covering Relative Strength Index, or RSI. We're also going to be reviewing moving averages, and then the third one is MACD. So these are the 3 metrics that are really quite powerful, and again, they can be easily screened for. And there is one key characteristic that works very closely with those indicators that I just mentioned. And that one key characteristic, again, you're going to see all of this with the examples, but is volume. So when these indicators turn positive or negative, and they are doing so on volume, that is a very key critical component that's going to indicate strength, be either upward or downward, but it's indicating that institutions are in there, and it's something you will want to go ahead and make sure you pay attention to. So here is the very first example, and what I'm hoping and wanting to show you here are those 3 indicators that I mentioned to you, and I'll get into a definition of each of them briefly. I do have other webinars that dig in quite a bit more, but this, what I'm going to review with you now, will be certainly enough to get you in tuned with those 3 indicators. So we're looking here at a chart of net T's, and this is a daily chart. So each one of these candlesticks represents 1 day of trading activity, and then the volume bars directly below that relate to that price information directly above it. So let's go ahead and review the RSI. I mentioned that to you. That is the relative strength indicator, and it's plotted in this case up above the price and volume information. So the RSI is, it's actually a current as well as a historical, it's providing you oscillator that's providing you with the indication of strength or weakness. So what we are looking at here is this dashed line is a net neutral, And the RSI has a calculation where it takes, in most cases, 14, that's your standard. A 14, whether if you're looking at it daily, it's going to be 14 days, weekly, 14 weeks, but it takes the last 14 time periods, the closing price, and finds the average. So in this case, it's the last 14 days of price history, and then it's plotted on this particular chart here. So your net zero, again, I mentioned when it drops below that, it indicates that your RSI, or your relative strength, is trending down or negative. And then if this particular line trades above that net zero, it indicates that the RSI is positive. So this is the kind of thing that you do want to see. But again, I did mention to you before, you want to get confirmation from more than one indicator. So let's go ahead and review some of the other indicators on this particular chart. So what we're looking at here on the actual price chart is these are your moving average lines. And for purposes today, I'm using what are called simple moving averages. And the red line in this case is what's called the 50-day moving average. This is a very commonly used moving average line. And then the green line is a 10-day moving average line. And the 10-day moving average on a daily chart is generally very, very helpful for these faster moving stocks, because you can see how the stock price tends to cling or trade very closely to that 10-day, and I find it very, very useful. Many of the stocks that I traffic in and work with are going to be these faster moving. So again, we're looking at a 50-day and a 10-day moving average. So with the moving average line, what these lines are doing is they're actually helping to smooth out the price action of your stock, and they're filtering out the news. So it is takes the closing price of a security over that specified period. So the 10-day will be the last 10 days, and the 50-day will be the last 50 days. And again, you are getting that line is plotting that average price history so that you can get an idea of whether your stock is in an uptrend or a downtrend, depending on the direction of those moving averages. But equally important is these moving averages can act as resistance. As you can see, it's kind of hitting its head, if you will. But once that stock turns, they then become support, these key moving averages. Again, I do have other tutorials. I have one devoted entirely to moving averages. I apologize for that that glitch. But so in addition to visually showing you the trend, again, these moving averages, they also are support and resistance, but you also can have what is called crossovers, a shorter term moving average crossing above a longer term. That's called a golden cross, and that can be very positive. On the flip side, a shorter term moving average moving below is a death cross, and that can be very negative. So let's go ahead and I will review down here at the bottom. We have what is called a MACD, and that stands for your moving average convergence divergence. And this particular oscillator uses exponential moving averages. And this also has a center line similar to the RSI. That's your net zero. And what you want to pay attention to with this particular oscillator is this black line is the MACD line, and the red line is what's called the signal line. Quite simply, it's a 9-day moving average. So two ways this particular oscillator is used by traders. One is what's called crossovers. When the MACD crosses up over the signal line, that's positive. And if it does so above net zero, that is even more positive. Likewise, if the signal crosses down the MACD black line crosses down through the red signal, that is viewed as negative. So let's go ahead and now that you have a overview and an understanding of these three indicators, what I did want to point out to you is I talked about the RSI turning positive as it comes up through this net zero, and if you were to screen for that, this may have hit your charts and your screens, and you might potentially be interested. What I wanted to point out to you, however, is you're not getting confirmation from all three indicators, and in particular, while this was trending positive, your price action was starting to trend up. However, your key moving averages were still in a downtrend. You want those moving averages to be heading north, indicating that there is positive momentum, there is wind behind the sails. So this positive uptick, hopefully you would not have gotten involved in the stock. You would have waited until down the road. And here we are looking at net T's. This is this most recent period in May. The stock indeed starts to have that positive crossover on the MACD. The RSI is turning positive, and even more importantly, now your moving averages are trending upward. And this is a stock that we've had on our suggested holdings list for some time. It's one of our bigger winners because we were able to capture that and not be involved during this whippy, generally downtrending period. So that is an explanation of those three key indicators that we talked about. Now let's go ahead and review the 4 key ways that you can use these trending indicators. And quite simply, they'll help you define a trend, whether that trend is up or down. It's going to really help you fine-tune your buy and sell points. And then also, these indicators are going to really help you make sure your trend is holding. And again, we're going to get into some examples as we go forward. And then lastly, determining broader market trends. And I put this in there because the broader market trend, uptrend, downtrend, or even sideways, is really going to be the big overall indicator of whether you should be in the markets or not. And so these key indicators are going to help you define where the broader markets are and where they may be headed. And that's a lot of what our weekly newsletter addresses and talks about. And we do use these indicators. So let's go ahead, and here's our very first example. This is a company, it's called Ellie Mae. And what we're looking at here is a daily chart of Ellie Mae, and it's taking us back to the January period, the beginning of this year. And as many of you know, that was a very tough period for the markets. But this particular stock, what I wanted to point out to you here is how this stock could actually hit your screens because it is starting to turn positive. So let's take a look. The first key indicator that started to turn positive here was the RSI. So you have your RSI trending above that net neutral zero. And when we can put it together with this price action, and this actually was a report, a very positive earnings report, and the stock gapped up so that now the stock is above, and in this case, the 50-day moving average is the blue line, and then I have a 200-day moving average, which is red. So in this case, the stock gaps up above both of those key moving averages, but take a look at the volume. And I talked about volume being one of the critical components that really tells you that this trend could be for real. And this volume is well above. Visually you can see it, and it is something that you can screen for as well, above average volume. So down here, of course, we have the MACD, and I talked about the MACD black line crossing up through this red signal line. So here's a stock where we have 3, and actually volume being the 4th, components that are signaling that this brief downtrend in February has been reversed. One other item I did want to point out is you can see this particular, again, we're looking at a daily chart, and here's a day where the stock actually had a significant move. It was at least 10%. And many people, and you're not alone, will think that once that's occurred, that the stock is pretty much, the uptrend has done its thing. There's not a lot more in the way of upside, but I will show you again and again that indeed that's not the case, that when you get these big volume bars, and in this case the broader markets were really finally coming out of that horrible January period, and so we had the broader markets in an uptrend, and indeed the stock did go on to greater heights. Now let's go ahead and take a look. I talked about knowing and indicating when that uptrend is reversed, and this is again really going to be critical to your trading. So during this period, the RSI is continuing to exhibit. It's up here in this positive territory, but in May, we did have that negative crossover that I mentioned, where it crosses down into that negative period. And let's take a look at some of the other indicators here that are taking place, and volume. So the stock gaps down in price, but it does so on very, very big volume. It crosses below this key 50-day moving average. And then lastly, we actually got the MACD negative crossover came before, just a little bit before. So if you were paying attention to that, that may have hit your screens first. And then again, you would have gotten confirmation from these other indicators that all was not well with the stock. And indeed, it did go on for a lengthy period of time to not only underperform, it has underperformed the markets. So that is finding your uptrends and your downtrends using these indicators. Now let's take a look at, in this particular case, I'm saying it's an upward trending stock. And what I would like to point out here, this is AT&T. Again, this is a daily chart, and I'm taking you back to the beginning of this year. And during this year, there was a lot of bloodshed, if you will. Most of the stocks in the broader markets were in a decline, but AT&T hit our screens because while the broader markets were clearly in a downtrend, this stock was trending sideways. It was bucking that broader market downtrend pressure. So it did hit our watch list. We kept it on our list, but when it really started to trend positive as far as the RSI, we did get a positive crossover on the MACD, and then your key moving averages started to trend upward, and this is a stock that gapped up on big volume, and this is when we put it on our buy list. This was in January of this year. It's since fallen out of favor, but we were able to experience a move. But more importantly, your RSI turned positive, and your key moving averages as well as your MACD crossover confirmed the strength that it was exhibiting by not going down with the broader markets. So, and here we are again. This is a bit longer term. I'm taking you out to the beginning of October. So here is AT&T again. This period we experienced a very nice uptrend. This is still a daily chart. So what I'm pointing out here is I really didn't, pardon me with this very touchy keyboard, but what I did not point out earlier with the RSI is there are what are called overbought and oversold periods. So this line is 70. If the RSI line goes above, that indicates that the stock is what's called overbought. And the reason that that's important to know is when a stock gets into that overbought period, there is an expectation that at some point the stock will sell off. It will not stay in that overbought period forever. There are some stocks that will stay in it for a lengthy period of time, but at some point in time, once it's in overbought, you do need to be on the lookout for a sell-off. So what I'm pointing out here is the stock during this particular period, and this is July into a little bit of August, the RSI line starts to trend downward, and that's in line with this sideways move. But take a look at the MACD. MACD is giving us a very clear-cut signal with this MACD line crossing down through that red signal line. So that's indicating that the stock's upward momentum is starting to falter. The third item that you're seeing here is this 10-day faster moving average begins to trend sideways. So again, you don't have this upward momentum. It's starting to lose steam. So whether it's visually or via screening, you want to be aware of when your uptrend could potentially be reversing. And sure enough, here in mid-August, we did get this crossover negative on the RSI. Again, MACD had already told us that this downtrend was starting. Once it crosses negative on the RSI and it starts breaking down through key moving averages, take a look at this volume. That's going to tell you that your uptrend has reversed. So I mentioned to you that we would review how to follow your uptrend for a longer period of time. For those of you that don't have the desire or the time to stay in front of your screen on a regular basis and watch your stock every minute, this longer-term uptrend is really going to be helpful for you because it's going to help keep you in these stocks longer and not be whipped around. So in this particular case, we're looking at A.O. Smith. AOS is the ticker symbol, and again, this is a daily chart. And what I wanted to point out to you, and this actually had an extensive move in the beginning of the year, here is your 10-day moving average, and I talked about using that because here's a faster moving stock, and you can see how the stock just tends to trade right into that 10-day moving average, using it as support. And it is an upward trending 10-day, so a very strong uptrend throughout that period. But let's take a look here, and we're looking at the end of April, beginning of May, and we start to see signs that all is not well. The RSI is starting to waffle and generally trend down. It's breaking down below that 10-day moving average. But what I did want to point out to you is this is your 50-day moving average, and your 50-day moving average is still very, very much in an uptrend. So what I'm pointing out here is when you are defining a longer-term trend, you want to use a longer-term indicator. So the 50-day in this case is longer term. And a lot of times you will see this. You'll see stocks that will pull back right to their 50-day moving average. The broader markets may have been in a downtrend during this period. You'll want to review what's going on, bigger picture, but a lot of times stocks will pull back to this 50-day and then find buyers. So if you have the tolerance, be it risk or otherwise, to sit through this kind of downtrend and breakdown, a lot of times you will be rewarded as long as your longer term trend is signaling upward. You will be in good standing. And here's AOS, and this is an even longer term trend. So what I'm pointing out to you here is taking you back to that May period where the stock found support and was able to bounce off the 50-day and continue that uptrend. So sure enough, your 10-day resumes the uptrend, and it happens again late June. And you'll find this with stocks. Stocks tend to have a history. They pull back to their 50-day and then resume their uptrend. So you'll want to look historically at how a stock performs to get a feel for how it may perform in a current situation. So again, your longer term uptrend is the one that's dictating the direction. As we move here, now this, of course, many of you may recall this particular painful day. That was the first day after Labor Day, after the summer, when the markets just had this huge sell-off. A lot of stocks did this breakdown, but then it did resume. But the bigger point here is using your longer term indicators to keep you in a stock. So the other way that we can use those three indicators that I mentioned to you is spotting sector trends. And being able to spot sector trends is really going to be helpful to you, because you may see a stock, it might hit your screen because they came in with great earnings, maybe the volume is picking up, but most cases you want to make sure that that particular stock is in a trend that is positive. So what we're looking at here is the ticker is XLK, but it's the Technology Select Spider Index. And we are looking at period here taking you back to the beginning of this year when the markets sold off. And what I did want to point out to you is again, we did start to get early indications that technology was turning. Your signal line positive crossover, the index popped up above a shorter term index, and the RSI was starting to turn positive. But what I wanted to point out with this is, from our work, we have found that you are generally better served if you wait for the index to cross above that longer term. And in this case, this is your 50-day moving average, because oftentimes you'll get a head fake. Once it crosses up above here and does so on volume, and then also we have what that golden cross, the shorter term crossing up above the longer term, providing you with that confirmation that technology stocks were reversing their downtrend and starting to go ahead and pick up. So let's go ahead and take a look. I'm taking you now because technology stocks really did suffer in the spring. That April-May period was tough for them, but technology stocks came back into favor in July, and this is something that we were able to pick up on and capitalize on because this is the breakdown in Brexit. But let's take a look at what happens here as the technology sector starts to break up through these key moving averages. Your RSI is trending positively, and then here we get that positive crossover. So in this mid-July period, another occurrence that was going on was the semiconductor index was exhibiting the same characteristics, and as many of you may know, a lot of these semiconductor stocks have gone on to help power the technology sector to new highs, as well as the NASDAQ. So again, having the sector strength behind you is really going to be important. So let's take a look here. I talked about downtrend reversals, and they really can be very, very powerful if you can spot them. This is universal display. Again, a daily chart. The green is your 10-day moving average, and the red is the 50-day moving average. So what we're looking at here is the stock actually experienced a nice move here in the beginning of the year when the broader markets turned, but we did have a downtrend reversal. And again, using that RSI, using that MACD down cross, and then also as it started breaking down through your key moving averages, you were starting to get signals that the uptrend had reversed. And indeed it did. This is about a 1-month period where this particular stock did underperform. You were not paid to be in the stock during that period, but it was still exhibiting positive fundamental characteristics. So for our work, it stayed on our screens. And then indeed during this late May period, this is a strong earnings report. The stock gapped up on very, very big volume. Above these two key moving averages, you have your golden cross, your RSI turning positive, as well as your MACD. So it indicated a resumption of that uptrend. The downtrend was reversed. And then again, we're looking at OLED on the daily, and this was that strong earnings report that I mentioned to you, and it helped propel the stock up, I believe, about 18%, so it was a nice move. However, during this period here, the stock really did not do particularly well. I mean, you would have, if you obeyed that red line, which is your 50-day and your longer term, you would have stayed in the stock and you would have eked out a bit more of a profit. But let's take a look at what, and again, how powerful this reversal of the uptrend can be. So we have the first indication here is this gap down on huge volume. Hopefully you can see that that volume is just unparalleled compared to its average. That's your first indication that this uptrend is pretty much over. A lot of times if our stocks break the 50, in fact pretty much every time, if it breaks a 50-day on huge volume, you no longer want to be in that stock, and indeed the RSI is confirming this downtrend with the MACD, and it has since gone on to lower lows. Your moving averages are now in a downtrend, heavy pattern, and you don't want to be in this stock any longer. And again, another example of using that longer term trend. This particular stock is Stryker Corp. This is a daily. Again, the green is your 10-day moving average. The red is the 50-day moving average. And what I wanted to point out here is during this period of time, this is taking us back to the stock actually broke out of a base here in the beginning of March, and the stock has gone on to higher highs. But there were periods of what I would call slippage, where the stock breaks this shorter term. You might be tempted to sell, but again, your longer term key moving average is still very much in an uptrend. The RSI never really got negative, so you can see where this stock has a history of trading down to that 50-day and then resuming its uptrend. So we've reviewed the examples. Let's go ahead and go over how you can screen for these trends, for these trending stocks. And the first item, I mentioned to you the RSI, and the way you can use your trading platforms to screen for these stocks is you want to look for the RSI going from 39, 38, 39 to above 40. And it's the kind of thing that's going to indicate that potentially the RSI is starting to turn positive. And again, you want to put it together with the other indicators, but that is for positive. And then for negative, you want to screen for stocks that are going from 61 to below 60. So that's going to be your first way that you can screen using RSI, quite simply. The next item that you can screen for is for MACD. So with MACD, there are a number of preset on various trading forums. There are preset trading screening criteria that will go ahead and screen for those signal crossovers that I talked about. And basically that is the black MACD line either crossing above or below the signal line. And you can use MACD for that. Lastly, with your moving averages, the golden cross, that's your shorter term moving average crossing up through your longer term, and then the death cross, which is negative, is that shorter term moving average crossing down below the longer term. So quite simply, those are key ways that you can screen for the particular items that we were talking about. And then pointing out to you again that a lot of what we were looking at today were daily charts. I would urge you to look at some of my other educational webinars where I use more weekly charts, because the weekly charts, we're using the same metrics, but if you are a longer term trader, they're going to be more useful for you because it's going to keep you in and then equally out of stocks for a longer period of time, and potentially you will not be whipped around quite as much. So that's how you can screen for that. And here we can review some of the conclusions that we can take away from this. So again, I talked about this in the beginning. Technical analysis is built around identifying trends. That's the real basis of technical analysis. So learning the indicators that we worked and talked about today is really going to be helpful to you in improving your technical analysis. And then secondly, you want to look at historically how your stock trades, and I've touched on that. Over the many, many years of reviewing charts, I've found that stocks tend to have their own what I call personality, where they will trade below a key moving average and then find support and so forth. So look at historically how your stock tends to behave, and then you can use it as a guide in helping you making decisions depending on where the stock is currently. This last item, know yourself, and really this is just pointing toward if you have the interest, the desire, and the time, yes, of course, continue to educate yourself, build these screens so that you can get in front of these stocks. If you don't have a lot of time, subscribe to a newsletter. And I know with our particular weekly report, anytime we identify a stock, we do a lot with the sector work. We are marking up those charts, pointing to these indicators, indicating why we like or dislike a particular stock or sector, and that can also be equally educational for you. So here we are. I mentioned to you at the very end there would be a very special offer, and in this particular case, what I would like to show you is, or have you take a look at, is it's called the 6 Characteristics of a Winning Stock, and this is a educational audio book, and what it is doing and will do for you is identify the 5 key traits that a winning stock has. I mentioned that a lot of my work was centered around studying those winning stocks, and in this case, by winning stocks, I'm talking about stocks that are up at least 100%, and in many cases well over 1,000%. And what's been found by studying those stocks is that every single one of these winning stocks have key traits, and this is going to review with you those 5 key traits that every single winning stock has before these big moves. It's filled with quite a number of historical examples that give you precedence, and then it also gives insight on where you can uncover those necessary characteristics. There's also one key ingredient, and it's not the volume that we just talked about, but there is one key ingredient that absolutely every winning stock needs to have prior to this big takeoff. So normally this particular item is close to $300. You can get it today for only $39. There is a link at the bottom that you can go ahead and use to access that. I also put my website here for anyone that would like more information about me and the work that I do. You can go ahead and please visit my website. I have a free ebook there for those that are interested as well. And so what we can do now is go ahead and review some questions. So if there are any questions that anyone is interested in having answered, we can take a look at that. So someone was asking, will the recording be sent? Yes, the recording will be sent. So those of you that would like to review this later and further, you can go ahead and do that. And RS, yes, MACD does show divergence as well. That's a very, very good point. And again, I do have other tutorials that get into that quite a bit more in detail. And you're asking about my scan in stock charts, and actually in stockcharts.com I am part of their top advisors corner, so I write blog articles pointing out different stocks, different sector rotations. I do not at this time have a scan that is a part of stock charts. And Craig wanted to know, do I use candlestick patterns? I do. I have found them to be a useful tool, and I also have other institutional level charting services that are helpful as well, but they are very, very similar to that candlestick. And someone was asking anything for the day trader, and yes, I apologize for not getting into it with this particular webinar, but every single metric that we reviewed today can be used in intraday charts and equally effective. And applicable to short-term scalping, yes, Robert, of course you can. You can use these intraday, and again, I mentioned I do have other webinars that get into this a little bit more, but if you would like to email me, I can provide you some of the ways to go ahead and screen for these using intraday. And option setups, a lot of, I do have clients that subscribe to the newsletter and they trade only options. They are using the stocks on our list to then go ahead and use with their options trading. And I believe that is the last of the questions. I do want to thank you again for taking the time, for listening. Feel free to reach out to me or Pro Trader Strategies for any kind of additional questions, and we're always here. We want to educate and help you take your trading to the next level. Thank you again.